I have. Well, I don't know that it's going to go the way of 3D printers because that was probably the most hyped, not really ever gotten to its promise, right?
Right.
Of technology. So, but getting back to AI, AI has some great uses, no doubt. I mean, it's like magic, but better because it's real, right? And where I think it's overhyped is it's not going to be quite as knowledgeable. It will be great in spot applications, but it's not going to take over our lives. Sorry. That's what I think. And it's going to take far longer to roll out than we ever thought. Look at autonomous cars, which use a lot of AI. They're solving difficult problems, which take a very long time to solve. But that being said, Nvidia will benefit in time from its chips. No doubt, it makes some of the best chips that run neural networks, and that is machine learning.
Right. I mean, I'm seeing analysts mark down, what Google might, or mark up Google's expenses, because if it has to shift to this kind of computation, it's massively more expensive. So bottom line, Kim, would you tell people that Nvidia stock is overvalued here because this is too much hype? Or is it a good long-term hold for this kind of next wave of the future?
Sure. I think you have to be a really long time holder as an investor to make money overall, but especially in technology. And this is one of those companies that has technology that's going to be needed for years to come. So have patience with this company.
All right, 55 PE, reasonable. No, Steve, thank you very much. Let's turn to Alibaba now, whose shares are down 21% over the past month. What happened to the China reopening? Dom Chu has the story here. Dom.
All right, so from a headline perspective, Kelly, we're going to be looking for earnings of about 16.26 yuan, or Chinese renminbi per share. Revenues of about 245.2 billion yuan / renminbi. Now, beyond those top and bottom line estimates, investors will be wading through the report for any commentary or signs tied to your point to the health of the Chinese consumer and the impact of China's reopening efforts post its zero COVID policy. Will there be any kind of outlook offered for not just the e-commerce business, which, by the way, makes up the bulk of Baba, but also the cloud services as well, kind of like Amazon? And much like other Chinese tech companies, it's got a lot of smaller non-core stuff going on. We're talking things like food delivery, fintech, streaming video. So are there any updates on that front? And of course, Kelly, will they say anything about artificial intelligence and their ambitions there? As for the options market, it's pricing in a possible move of 5% up or down, Kel, on the heels of that report.
Kim, if I'm not mistaken, Munger just called this one of his biggest mistakes of all time. Do you like the stock here?
I do not. Although they've out-Amazoned Amazon over in China, I think the political issues around any company in China always gives me pause. Jack Ma went on some sort of vacation at some point. It's these kind of issues that just make me run the other way. The other thing is demographics in China are not good. If you're a long-term holder, that one-child policy is supposed to make the population decline, and it looks like they're on that tipping point whenever they released their population census a couple of months ago. So we look for China to be a declining population area. And as that, I think there will be better places in the world to invest.
Very interesting. And again, a lot of this kind of reflected in how poorly it's been trading. All right, finally, let's talk about NetApp, whose shares are up 9% so far this year. But they did just announce plans to let go 8% of the workforce, thanks to that pullback we're seeing in IT spend. Dom, what can you tell us about this one?
So to that broader point, investors will be, Kelly, looking at what NetApp can actually show them about the health of the cloud computing enterprise or industry overall. The consensus estimates, $1.31 a share in earnings, $1.61 billion in revenues. Some traders and investors may recall that NetApp stock got crushed on the heels of earnings just a quarter ago, due in large part to what was viewed as a softer forecast, right? So the outlook really disappointed. With that in mind, what will demand for cloud hardware and software look like? Are the macroeconomic concerns clearing up enough for companies to spend more on cloud computing? What's the growth in product versus the higher margin services business at NetApp? And part of the outlook disappointment, by the way, last time around, Kelly, was on currency headwinds. So what does it look like now? As for what to expect on the trade, options right now pricing in a 7% move up or down. So it could be a volatile one for NetApp and cloud computing.
All right, Kim, this feels like the kind of under the radar stalwart name that I'm guessing you're a fan of, although it is down more than 20% over the past year.
Sure, and for good reason, because IT spending at the corporate level has been soft. NetApp serves a purpose that people don't probably understand, that they can have blended hybrid data for the companies that need on-premises data, but also offload it onto the cloud. And that's really what their secret sauce is. And I think that this world is going to exist for quite some time. They're very good at operating in heterogeneous environments. And that's why I really like this. And remember, I am a long-term investor, 3 to 5 years. That's the short-term view for me.
Sure.
So I'm thinking companies are going to create data and have to store it. And that's the end of that.
And 12 times forward for your buddy NetApp over there. Really appreciate it. Great stuff, guys. Thank you both, Dom Chu and Kim Forrest, with our picks and our trade say. And we'll hear from all three companies as mentioned.